Everybody, this is episode 29. Thanks everybody for joining me. We're going to kick it off the same way as always. I'm going to tell you that my platform, we killed it tonight. 349 trading. Yes, another profitable day. And what did I do? I usually do a market recap. So let's start with the market recap. I told everybody this morning, 3-day weekend. Be very careful. The futures were up. Let's make sure we take profit in the morning. We probably aren't going to enter anything later in the day because there'll probably be a sell-off at the end of the day. So that's what exactly happened. Boom, there you have it. The point that I share market direction is to help you guys understand. I've got a bunch of lessons tonight. I'm not going to tell you all about the market, everything like that. I'm going to share with you to help make you better traders. That's exactly why I'm here, to make each one of you a better trader, better at trading, whether it's your entry point, your strategy, the way you think about things, or the way you plan. I've got a few lessons tonight. Now, why do I have lessons? Because we have a platform, 349 trading. I have a couple of lifetime members. And as I talk to these lifetime members, because if you sign up for a lifetime membership, you get 30 minutes with Matt. So as I'm explaining some of my lessons to them, I'm like, this is great for everybody. Let me share this. Let me simplify, and you guys will see the value there. Not to mention, my alerts are on fire for another day. So yeah, we're 29 days. This was the best week ever. Just so you know, my alerts right now are trading at 80%. My options alerts, I was 76%, then I was 78%. My last trades make me at 80%. Yes, I've had 15 losers over the course of 2 months, and I've had 58 winners. You do the math. I mean, it's simple math. Okay, so let's talk about what we saw today real quick, all right? This morning, average down on eBay. Why? Because eBay tanked at the end of business yesterday, and that's what we do. When our positions are down 40 to 50%, which mine was, I don't buy more than 2 positions on one day. So I entered into eBay yesterday. It went down. I paid like $1.15 per contract. It went down to 39 cents at close. So what did I do first thing this morning? I put in a bid at 46 cents. I bought twice as many contracts, and now I own 89 contracts. And when eBay returned to normality, right, my stuff was up. Yes, it tanked at the end of the day, but I told you guys, I saw the demand, I saw the buying. What do? I track demand, I track volume. So when I tell you I see something, it's going to be there. We can talk about any of my previous picks. So anybody new here, please check out my previous episodes. If you're in a shitty stock position, episode 14, but any of my previous episodes, I'll tell you about a certain stock. I'll mention NNOX, I'll mention EH, APPS. Any of these stocks we bought and they went down. What happened the next couple of days? They went up. EH, we killed EH. I mean, so all these stocks, yes, there's always nothing instantaneous gratification. There's no instantaneous gratification. I don't give a stock, and we all get in and we're all buckled in. I'm like, yo, Tony, you in? Yes. Maria, you in? Yes. And everybody's like, all right, we're buckled in. All right, stock, take off. That's just ridiculous. Of course, there's no instant gratification. What there is planning. What there is the right way to invest. And I'm going to go over these small little lessons. So grab a pen, grab a notebook, write this down. This is crazy important. The amount that you're going to get right here today like dwarfs everything that you've seen on YouTube. So please, if you like what you're seeing, subscribe to my YouTube channel. Push notifications if you haven't done that. If you're watching me for the first time, watch some other videos. Video episode 3, options, okay? I have an options video where I simplify options. Very easy. Episode 17, episode 21, all good episodes. Let's see what else we're going to talk about. I spoke about some stocks, but we're just going to wait for the slides today because I'd rather get to more questions. I heard we have a lot of questions. But yes, I spoke about my recent plays, include NET, D-Dog, also strong. Now, Roblox, what did I do? I sold my Roblox shares. 3,000 shares the other day at $92.24. What happened? Roblox spiked up to like $98. I couldn't help it. Guess what? It went down today. I still can't help it. Doesn't matter to me because I'm out of the position. Same with Party City. Out of the position. I don't care. I sold it at $10. All right. When I give alerts, it's because I see volume. I see demand. You'll see that when I give you guys some charts. Let me speak out the lessons real quick. All right. So here's the lesson from start to finish. Here you guys go. Ready? Start. Lesson 1. We're looking for something on sale. So when we see something we want, an option that we want, a contract that we want, and it's $3, we do not pay $3. We look at the bid, whatever the bid is, and we decide we're going to pay 25% less. So if it's $3, 25% of $3 is 75 cents. We would put on our ask at 2.25. Bids at $3. We don't want that. We want a sale. 2.25. Got it? That's it. Simple lesson. Whatever someone's asking for, you go into a store, they're asking $200 for this jacket. No, I'll give you $160. If they accept your offer, you get it at a discount. If they accept your bid, you get it at a discount. Do you understand that? Okay, next, Lesson 2, strategy. You obviously think the stock is going up if you buy a call. You obviously think the stock is going down if you buy a put. So what's the strategy? The strategy is come up with a determination to get out of your position. So you just bought this contract. You paid $225 instead of $300 because you bought it at a discount, okay? $225. What you do is you take a calculator out. You multiply 225 times 1.6. That will imply you're getting a 60% return. Say you want a 70% return. 225 times 1.7. Say you want a 30% return. 225 times 1.3. The point is, whatever your answer is on your calculator, that's what you're setting your sale price at, your ask price. So you paid $2.25. You decide you want 50% profit, which is $1.12. So you're going to set your price at $3.37. You paid $2.25. It was started at $3. You didn't pay $3. You put in a bid at $2.25. So $3, you put in a bid at $2.25. You got it. It goes back to $3.25 or $3.37. Guess what? Instead of just being up 10%, you just cleared 50% and you're done. That's it. You're out of it. You're done. So real quick, you buy whatever it is on sale, the option, the stock on sale. You plan ahead so that you have a strategy. You know when you're going to exit. You know what kind of profit you want. You want 20%, 40%, 100%. It doesn't matter, okay? And then real quick, let's say your stock or option doesn't go up right away. Here's how you average down. Let's do stock first. Your stock is down 10% since you purchased it. Then you buy another 25%, meaning you bought 100 shares. It goes down 10%. You buy another 100 shares. It goes down another 10%, another 100 shares. It's the way to average down. 10% for stocks. You buy a $10 stock, it goes to 9. Boom, another 100 shares. Do you understand? Now, options, it's a little trickier, so take a second, okay? You buy an options position. You pay $400 for the contract. It goes down 40%, all right? $400 per contract, it goes down 40%. So it's $260 now, all right? It's down 40%. You buy contracts, meaning you entered into 2 positions to start. You buy 4 when it goes down 40%. You buy 1 contract to start. You buy 2 when it goes down to 40%. Whatever you buy, you double that. So whatever your first position is, I buy 10 contracts at $400 each. 10 contracts, $400 each. They go down 40%. So now it's $260 each. I don't buy 10, I buy 20. So now I have 30 contracts, and instead of being down 50% or 40%, I'm already down only 18%. So when it spikes up just a little, when the stock goes back 2% instead of 5%, it's not even where I first bought it yet. I'm profitable. I'm green. So that's what I did with eBay today, and I'm excited to show you my options. Yes, eBay fell off the end of the day. Guess what? I'm still green. That's what averaging down correctly gets you. So we've got the sale. You buy it on sale. You plan ahead so you know your exit. Now, I understand some of you can't day trade. On my platform, I give out trades. They are to carry over to the next day. I don't screw anybody. No bag holders. Now, let's talk about Fisker this morning, right? I had these Fisker options. I made 220%. I announced that I thought it was going higher, but I was going to sell to secure my profit. 220%. Yes, that's the trade I closed out today. My eBay went from down 40 or 50% to positive 10%. These are how you average down. Now, if you don't average down, or you think I'm full of shit, or it doesn't make sense to you, if this makes no sense to you, watch it over and over again. Why? Because if you don't average down correctly, you will not be a profitable trader. You will just keep losing. It's inevitable. If you enter into whatever it is, let's just keep talking about options, and you buy 30 contracts and you don't have enough money to average down, you're going to lose money. You might win this trade. You might win another trade, but overall, it's going to be real quick. Your account's going to go from 30,000 to 20, from 20 to 10, 10 to 5, 5 to 0, and you're going to be dead and be like, I don't know what I did. This dude's on fire and I still can't win. It must be me. It's not you. There are ways to blow up your account, and I want you guys to avoid that. So you must use the proper way to average down. You must use the proper way to enter into a position. I can't answer enough times how many times, okay, just average down, buy 3 more contracts. The guy says, I can't buy 3 more contracts. They're only 58 cents. Buy 3 more. It's $180. I can't. I don't have any money. Then you shouldn't have entered into the options positions in the first place. Whatever the first position is, $1,000, multiply it by 5. You should have 5,000 on the side. If your first option position is $200, just one contract, you better have $1,000 on the side times 5. Yes. All right. So hopefully that'll help you. Oh, one last lesson. Here we go. Yin and yang. Yes, I'm bringing some Confucianism into this shit right now. Okay. Yin and yang. What does that mean? It's same as going one door closes, another door opens. All right. In life, things tend to work out. So yin, yang, it's like balances each other out. What does that mean? It means one day there might be outflow in the stock, but if I'm telling you I see demand and I see volume, guess what? Yin and yang, it's going down one day, it's going up the other day. We use my information to gain entry at the best entry point. Then we use the strategy to prepare it in advance. And I'm going to talk about that later. I'm going to bring Carlos on later because we're going to speak about AMC and planning in advance. This is perfect. He called me up. You know how you guys DM me on the side? 300 DMs on the side I get, right? Carlos calls me up to tell me that he followed one of my rules and it worked. I'm like, don't tell me. I'm going to bring you on tonight. We have a special guest. Carlos will be joining us in a little bit. It's going to be great. But let's get to some slides and then we get some questions. Let's do that. All right, so slides, what do we got today? Okay, Root. So the other day I gave an alert out. It was like 3 days ago. I saw a volume spike in Root. I mentioned it. Look, it's $8.52. Pay attention. 2 days ago. What happened today? Let's go on the next slide. Root spiked. It went to $10. What does that mean? It means 100% return. Again, yes, I told you guys, stock only. Again, but I like to play with options. What can I do? If I see something, I go with it. If I give an alert out to my platform members, I want it to be 100%. So if I tell you stock only, it's for your safety. If I tell you options, you're okay. All right, next slide, please. Yeah, eBay. So this is what I was talking about. This morning, I was back up to 9%. But as you can see, my first purchases were at $1.14 per contract. I think I purchased like 31. And then what happened when it spiked down is I purchased 50 something more, 57 more at a fraction at 46 cents. So now when it ends the day at 72 or 79, I'm crushing it. And it was as high as like 90. I was up like 30%. Yes, eBay fell. eBay is going to be strong next week. No doubt. Next slide, please. And I try and share these lessons with you. Let me see. Yeah, so here's my eBay lesson. If you average down the correct way, which is what I just expressed to everybody, eBay was down over 70%. Okay, we entered into yesterday. It was 2 hours old. We're down 70%. WTF, Matt? What are you talking about, Matt? Where's my instant gratification? It's coming. Don't worry. Somebody sold off. I don't know this for a fact, but this is what I see. So what did I do? Pre-market. I planned ahead. I averaged down. I put a second position there. 25% rule. 25% rule yesterday, 25%. This morning, I used $3,000 each time, and I turned my position from red to green. But this is what I share you. There are lessons that I share that are just priceless. You need to do this to make money and be a good trader. Next question. I mean, a successful trader. You could be a good trader and know what you're doing. Okay, so eBay, just one more time. I expect to see 63 or 64 by the end of next week. If you look at that, okay, I used Webull. Look at the big orders, the large orders, the institutional orders that came in. You'll see they're big today. No outflow, only inflow. So yes, it might take an extra day or an extra 2 days, but we have 4 days next week. So eBay will be strong. Next slide, please. Okay. Oh yeah, I did. I sold a piece of my eBay options. Just I had like 2 for June, 47%. There's a little more. Next slide, please. The point is, you can always secure profit, just like I said this morning. Now, this one, which is currently a losing position because I must be a loser. No, because the UVXY, all it does is know how to go down. So when it spiked at the end of today, right, there are a couple things you could be doing at the end of today. The UVXY, you could be buying puts. The SQQQ, which spiked at the end of the day, you could be buying puts. Meaning, you think the market's going to be strong and these ETFs are going to go down. All the UVXY knows how to do is go down. We've crushed it 3 times. Our first $1 million day, if you guys remember that, it was May 7th, right? Yeah, it was May 7th, and we had $1 million day. Because everybody, we crushed in the UVXY. We made like 300%. By the way, this week was the best week ever we've done as a platform. It was sick. Every day, 100% returns. You guys are awesome. If that happened for you, and I know it did if you're watching this because you're part of my platform or you found me on here, please show this video to other people. Share this. Give me a thumbs up. Give me a like. I'm not asking for much. I charge $3.49 a week, and we crush it every day. You guys show me ridiculous returns. I've got a joke that I'm going to double my fee. It's just a joke. I'm kidding. All right, so next slide, please. Sorry, I get interrupted. Yeah, so this is it. UVXY goes down. Even if it spikes at the end of the day, guess what it's going to do on Tuesday? It's going to go down. Guess what it's going to do on Wednesday? It's going to go down. Same stuff, same stuff. Next slide. All right, another one on my spreadsheet. Again, I have any white position is an open position on my spreadsheet. It means I either have stock or options in play. EMON is one on my spreadsheet. What did it do today? I think it popped like 40%. Actually, I think it went closer to $4. So it might have even popped like 50-something%. Point is, I have a spreadsheet. I have stocks. So if you're like, oh, you didn't alert that stock, they're all on my spreadsheet. My spreadsheet's there on my app for everybody to see, on my website for everybody to see. If the position is white, it means I have a position there. If my average price is like $3 and the stock was only $2.19 or something like that, it probably thinks you can get in better than me. If you get in at $2 and I'm in at $3, shit, that makes plenty of sense to me. Why wouldn't you buy some? Anyway, it's not alert, but that's why my spreadsheet's there. It's always there. When I change a position, I buy something, I make it in yellow. When I close it, if it's green, I close it green. If it's red, I close it red. I alert you guys when I close the position. But this one's good. I'm holding this one. My price target on this one, I think, is $5 and change. You'll see it on the spreadsheet. We're only $3 and change. Maybe we're closer to $4 right now after hours. I don't know. I don't care. I don't pay attention to after hours. What happens in after hours? Less than 1% of trading. Next slide, please. Yes, FSR. This is the one I sold this morning. Now, thank goodness I did. I did not get where I thought would be max value, which would be over $1 per contract. I had 240 contracts. I actually thought maybe it would spike to $15. Maybe I'd collect like 40 grand today. I was wishful thinking. The market opened. I had an order set at like $1.19, which is what I told everybody, $14.19. It didn't happen. I had to rethink. I acted quickly. At 10 o'clock, it gave me some hesitation up there. And I said, you know what I'm selling? I think I got 77 to 80 cents per contract. I paid 24 cents. Do the math. I returned 220%. Next slide. We sell and we claim profit because something can go down. Okay, AMC. Who's here for AMC or GameStop? Who thinks there's going to be a revolution? Now, real quick, all right? I hate the institutions. If you hate the institutions, share this video. But I hate the institutions. Why? They're trying to steal money from you. They are. It has nothing to do with AMC this time. They're trying to steal money from you. It could be AMC, and I'll tell you why. So AMC goes up to 29. The institutions have a lot of money. They start selling these calls, these out-of-the-money calls, $30 call, $40 call, $50 call. Somebody I know has like an $80 call. AMC at $80. Why would you buy a call like that? I guess you could possibly make money if AMC spikes. Maybe somebody will pay more for your call than you did. The point is, who's selling you all these calls? The institutions are selling you these calls. The institutions are making money off of the retail traders' hope that AMC goes to the moon. Now, what's happening? The institutions are shorting the stock when it goes to 29. I mentioned I did an emergency broadcast at $29. We're going to get the hell out of there. We're just going to short the stock. There's no reason to be in the stock, right? But I didn't short it myself because that's crazy. I don't want to mess with the retail traders. There's 30 million of you out there. But the point is, the institutions, they know. $29, that's a little high. They start shorting it. They're selling calls. They're buying puts. They have unlimited funds. So you guys say to me, yeah, Matt, but look at AMC. I wrote it up to $18. I wrote it, I wish I wrote it to like $29 when I came on the day. The point is, there's only a certain peak. The stock can't go through the roof like that. Stocks don't move like that. They never do. Anytime you see a J hook, which is like a fishing hook, the stock goes up like that, it always comes back down. There's no J hook into the clouds. You're not like, where'd that stock go? Shit, that stock never came down. Or you ever see like a baseball hit? It like never come down. It's coming down. Things that go up, it's gravity, yin yang, okay? So AMC, it goes up. So what's happening? The retail trader, okay, the millennials, the 30s, the 40s, I don't care how old you are, the 50s, you own 10,000 shares, 20,000 shares, you're buying and holding. So as you buy and hold, nobody's selling. As people are demanding the stock, the price is going up. Supply, demand, price goes up. Boom, like that. As the price goes up, what are you guys doing? Buying more until people start saying, I'm going to take profit. The market's going down. I'm going to take profit. The institutions get in and they short sell it. The stock goes down. All these calls become worthless. Where did the stock close at? $25, $26. That means the $27 call. The stock was as high as $36 this morning. That's what happened. 36 on open. Who do you think is buying all the calls on open? I'm buying 28, 29, 30, 31, 32. The point is, they're selling them to you. They're selling them to the retail trader. They're worth zero. And now you guys are saying, well, AMC can still go to the moon. Yes, if everybody in the world holds their shares of AMC and more people are buying AMC, it'll continue to get higher. But if you follow me on my platform, I told you the other day, take your profit. If you wanted to re-enter, you could have re-entered today at $24, $25. You could have been out at 29, entered it. So what does that mean? That's a 20% discount. So you have $100,000 in AMC stock. You sell at $29, you buy at $25. Guess what you have now? $120,000. You had $1,000. Now you have 1,200. You have 10,000. Now you have 12,000. It's not to support the AMC army. It's to make you money. So congratulations. You want to be an AMC, make money? Yes, I know some of you are still there. Get out at the top, rebuy the same position. Support AMC. It's fine. Just don't lose money. Don't lose money for your portfolio. All right, I'm going to bring on my guest real quick. He's going to tell a real quick story because he had the audacity to call me to tell me my rules work. So let's bring Carlos on real quick. Let's just add him to the stream. Hey, what's up, Carlos? So Carlos,
what's going on?
And what did you tell me, Carlos? Please just share with everybody.
All right. Well, I don't have time to be trading like I used to trade before. That's how we met. And I'm doing a lot of stuff behind the scenes for everybody. So first of all, thank you, everybody, for being part of this. All right. We love you guys. You're the 349 family. But 349 family takes a lot of my time. And today I'm like, you know what? I really want to do some trading. And I don't know why AMC just called to me because it was at 36. Then I saw it go down to 28. I'm like, maybe I'll get a little option. So I got a 29 option. And what I did was
Carlos thought it was going up.
A call.
Not a put option.
Yeah, exactly. I got a call option at 28 because I saw a little bit of support. And I said, well, it might go up to 36 again. Who knows? But what I did was I bought it, and then immediately I put in what I wanted to get out of it. And I forgot about it because then, I got an email. Hey, this doesn't work. Hey, how can I do this? Blah, 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 blah. And I was dropping off my son at school. I'm driving back. I forgot about my call. All of a sudden, I see it hit 100%. I'm like, what? Wow, awesome. So I called him. I'm like, hey, Matt, I just, I followed your thing here, and then it hit. I didn't think it was going to hit. And then when I went to pick up my son, and I'm coming back, I just checked the market, and I see that it went down all the way to 24. If I wouldn't have followed the rule and I just hold that thing, I'd be riding the stupid elevator right now. So
excellent. Thank you, Carlos. Work, man. Thank you. Awesome, Carlos. You're out of here, buddy. See ya. Okay. The point was he didn't tell it the way he did, right? He actually called me up and he's like, dude, I bought this AMC option. I'm like, no. He's like, no, I made 110%. I'm like, how did you do that already? It's so early in the morning. He's like, as soon as I put it in, I put it for 110% return, and I didn't think it would hit. And I'm like, and he's like, it took like 10 minutes. It hit. And I'm like, dude, why are you calling? Same way I get angry, not angry. I get amusement. You guys DM me on the side, 300 DMs. Carlos is calling me, telling my rules work. I'm like, I know my rules work. He's like, no, but I made it 110% in like 10 minutes. I was making breakfast, and then later on in the day, I had another order in, and I was picking my son up from school, and it was real cheap. I forgot I had the order, but I guess the end of the day, something happened because it got triggered. And guess what? I'm up already. It was CSIQ, which is not a stock that I gave out, Canadian Solar. But yes, he entered into position late in the day because it got triggered off an order he didn't remember he had. And guess what? It went up. So the point is, it's always, I gave this example earlier, planning in advance. As soon as you buy the option, put an order in to sell it. I know you're a day trader. It's probably not going to get triggered. But if you can make 100% return, yes, use one of your day trades. That's what it is. All of my returns have been crazy lately. 100%, 100%, 100%. And if you don't believe it, just watch my videos. Every day I talk about what we did in the market, and I share videos and slides and everything like that. Please subscribe if you don't. If you're not a member of my platform, play it forward. Just subscribe here. Give me the thumbs up. Share this video with somebody. This is all organic. So yeah, everything we do is for $3.49 a week. That's it. How can I be more on fire than Wall Street? How can I be more on fire than these gurus? Than Chris Sane, who sold my buddy a $270 program, which he hasn't got today. I mean, he hasn't got it. He ordered 3 weeks ago. Can't get the program. I'm charging you $3.49 a week, and YouTube is free. So subscribe, watch my videos. This is great. Guess what time it is? So we have a period of every session where it's Ask Matt, which means you can ask me a specific question about a position that you're in. You can ask me about an upcoming contract that you're thinking about buying or an entry point, or you can ask me about a specific stock and say, hey, here's the stock. And I will tell you, I pretend I'm getting 100 shares, and I will either hold the stock or I will sell the stock. So it's a hold or sell game, or I answer any questions. There is a button on the side. If you guys entered late into this YouTube thing and there were so many questions lined up and you want your question asked first, yes, just like $3.49 a week, we don't charge much. Tip something, $2, $4, whatever. We use it on the platform. We don't take it. Carlos and I have never paid each other yet. It's great. Why? Because here's the goal. I want 1 million followers. Why? I want to disrupt the way institutions treat the retail trader. I want to educate 30 million traders, but I'll take 1 million. I'll take 1 million traders that want to actually improve their lives, that want to change their family lives for the better, that want to change their economic status. That because of COVID, we all ended up here for some reason. I found you guys found me. I never was into social media, and in no way would I think I'd be talking to a computer and people would actually be watching. So I'm thrilled, but you know what I'm thrilled about? And I take such pride in this, that my followers understand that the platform member, that the 349 family, you guys now understand how to trade so much better. Every day, I still get 300 DMs on the side, showing me positions, showing me profit, and showing me that you understand the rules, which is excellent. I mean, I can't be more proud. I seriously could not be more proud. I feel like a father of like thousands of little kids. All right, let's get to a question. You guys are great. Hey, Matt, I made a call with AMC for strike price 80. Yes, you did. Expiring next week. How do I feel about it? You've been thinking about getting puts on it also. Okay, I wouldn't get puts because everything is risk versus reward, okay? It's risky. It could go down to 20. It could go up to 40. Is it going to 80? No. Does that mean that your call option is going to be worthless? No. Remember my example, my friend's son, back when GameStop exploded, he had $400 worth of options that became worth $100,000. He had options on GameStop, a call option for $740 strike price. Never got to $740. Do you know how much he sold those for? Like $800 per option. It was ridiculous. People are willing to pay crazy things. So on Monday, I tell you, plan ahead. So let's assume you paid $1 per contract. Set the ask at 4. You'll make 300%. If you paid $2, set it for 8 cents. You'll make 300%. The point is, whatever you paid for it, don't be a watcher just hoping it explodes to 100 because that's not investing. Investing is picking a good entry. Hopefully you paid $1 per contract and picking a good exit. Maybe you'll sell it for $2, $3, $4. It doesn't matter. You pick. It's your risk. But yeah, nothing's wrong with that. I'm not downplaying it. You want to buy an AMC contract at 50? It's not going to hit, but you could still make money. All right, next question, please. It's a good question. What's up, Romy? Romy, you just giving me money? You're the best. All right, that was for Love, 99% because you're missing your 100%. Yes, so we have a follower, Love. This woman did something great. She took her account. She took it up high. Then she blew it up. She went from probably over day trading account, $25,000 to under $1,000. And I'm sorry, it's the third episode in a row I'm talking about you, Love. Please forgive me. But she's awesome. From 1,000, 2 weeks later, she went to 9,700. Guess where she is today? I think she's around 18,000. So yes, in like 2 weeks, 1,000 or under 1,000, it was 884 to clearly over 18,000. Okay. I've been on fire. So if you use my strategy, you're using my picks. We pick the entry point. You guys get in better. There's a 10-minute rule, which means every time I give an alert, 10 minutes later, the stock or the price goes down. It's amazing. You guys get in 20% better than me. The good thing is I pick the best exit strategy. When I exit, I get max value. And that's what I'm sharing with you guys. All right, next question. You guys are doing amazing. I'm doing amazing. You know how tired I am? I did 2 one-on-one sessions. I have another one-on-one session. I get up at 4:30 in the morning. I go to sleep at like 2 a.m. and I try and help you. And I'm teaching lessons. So please, everybody, bear with me. I'm not stressed. I should be stressed, but I love this shit. All right. I love this YouTube. I love educating you. I love sharing stuff with you. This is amazing. And the fact that you guys are benefiting from it, it's just like, it's a freaking miracle. People tell me all the time, you're changing lives. I will change lives as our platform grows. Organic. We just grow. Our retention ratio is crazy. Once you join the family, you don't leave. It's like we're mafia. All right, Nick, appreciate it, man. Nick, you're in the $61 eBay call that expires Friday. Do I think we're looking good? So this is the same position I entered into at $1.15. This is the same position I averaged down when it was 46 cents. When I put in my bid this morning, I bought 2 times as many contracts. So yes, right now I'm completely flat. But let's say you're completely flat too, all right? Because some people actually got them better than me. I paid $1.15 for my first position. People paid $85, and then it went all the way down to $39 at the close yesterday. $39. Yes, if you got in, even though it went down at the close of business, you'd be up like 70%. So yes, eBay, I showed you guys strong demand. I showed you big orders. Always important to look at big orders. Now today, the market's just volatile. If we have a strong market day, whether it's Tuesday or Wednesday, I expect eBay to be $63 and change, as high as 64. I mean, it's so strong. I love that they do NFTs. I love everything about eBay, which I used to hate eBay. It used to be like AOL, like, you know, that AOL streaming service. Anyway, yes, we're going to be fine for next week. Calls are killing it. Plan ahead, though. So what am I telling Nick to plan ahead? Here we go. Tuesday morning, he's got his position. He paid whatever it is. He wants to make 60% profit. Take the ask, put in 60% profit. If it hits, great. Guess what? Don't watch the screen. Do the same thing on Wednesday. Put in your ask for 60% profit. It's like a cash register. You program it in. You don't actually have to watch. You know if the stock spikes, you're going to get your ask and you made 60%. You don't care. I'm teaching you to trade with math and without emotion. Do not be emotional. You put in the number you're supposed to put in, you average down the right way, and when the stock rebounds or even excels or explodes upwards, we're making money. That is how I trade. That's how I'm successful. It's not rocket scientists. You know, it's not, I don't have to be at NASA. I'm trying to teach anybody. You're a school teacher, great. A librarian, great. You work a garbage truck, I don't care. You're a waiter, perfect. Join. We're here. Okay, next question. That's awesome, Nick. Thank you, dude. All right, what do I think about Palantir? And thank you for all I do. Okay, well Palantir, I've mentioned before. Now, Palantir is a growth stock that also doesn't have any revenue. So when it doesn't have any revenue, if the market is beat up, it struggles a little. So it bottoms at like 18 and change. It's holding $23. That's not bad. All right. It's like these other more. Let's just look at the chart real quick. Okay, there was some selling today. Even though Palantir went up today, it went up 1%. There was actually more outflow and there was heavy volume. There was 111 million shares today. So there must have been some news that pushed it higher and people were trying to exit out and take their profit. So yeah, this is a great looking chart. In fact, ever since it bottomed, there's been demand. And on the 2 outflows days, the volume was so low. So yeah, Palantir is on my watch list, but I'm going to move it up on my watch list. I actually like Palantir. Good job. All right, next stock, please. All right, easy, James, easy. Slow down, James. NEO and Box. Okay, let's do NEO real quick. When NEO bottomed at $30 and spiked up to $33, we knew we were in there. When our options went down, because we bought in originally at like $36 or $35, it went down to $30. What did we do? We averaged out, if you're on my platform, we averaged out, we bought September calls. My September calls are killing it. I love NEO. I think when Biden discusses all his initiative and things finally start to get passed, NEO is just going to go higher. And my price target for NEO, I believe, is somewhere between $50 and $55 come like October. Am I telling you to buy the October 50 calls? No, I have option strategies in or at the money. Okay, simple. We only buy on dips. So just because I'm talking up NEO right here for a second doesn't mean you go in first thing Tuesday and you buy NEO at the ask. No, you plan ahead. If the market's tanking, let NEO go down. Yes, I have a position, but I want you to get the best entry. That's what it is. So I'm going to tell you, I'm not going to be like, yo, just buy the ask. That's the stupidest shit I've ever heard. If you've been told to just buy the ask, you should just punch somebody in the face. Yes, I'm not an advocate of violence. But again, they tell you, dude, just buy the ask. What are you, an idiot? Just punch him right in the face. I mean, that's just so dumb. All right, Box. Let's go to Box. Let's see what we got for Box. I don't even know. I don't think I know what Box is. Box Light. No, Box Light Parent. Yeah, Box Light Parent. Here we go. Okay. So, this company looks terrible. Oh, no, that's Box L. Sorry. Let's go to just Box. $23. Okay, yeah. What is this? Jack in the Box, maybe? Something like that. That makes sense. It looks like a return to society play, which would be like an airline, a cruise ship. I don't know if that's it. Raymond James ups their price target. That's always a good thing. I'm looking at volume and demand. And now the good thing, the inflow, so meaning the demand of the stock, every time volume's been above average, it's been an inflow day, meaning people are buying the stock. When volume's above average, there are more people buying and taking the stock. When people are selling the stock, the volume's smaller. So guess what, Mr. BOX? Box is now on my watch list. Thank you, James. I watch stocks like this. Now, there was good volume today. It went up 2%. I would not be entering in Box at $23.31. If I were to enter Box, I'm looking for a pullback of 4%, which is 80 cents. So my entry at Box would be $22.50. Some people say to me, Matt, how do you know that? Okay, it's $23.30. It's up 2% today. So I want better sale than today. Take away the 2% today. Give me a free 2% discount, and I'll buy it if it goes down 4%, which is 80 cents. Simple like that. I'm not taking, again, rocket science figures out. I'm saying give me back the 2% I didn't get today. Give me back 2% just for being a good guy, and I'll buy the stock at a 4% discount. Always plan ahead. All right, good question, though. Hopefully you guys get that. I always want a discount, and if I can't get the discount, I'm not buying the stock. I'm not buying the option. It has to come down to my price. All right, next question. Okay, what do I think of FSR calls? It's where you're limiting go through this morning. Okay, so the good news for you is anybody that has calls expiring June 4th for Fisker, all right? Fisker, like NEO, like Canadian Solar, like First Solar. I think Workhorse will probably be okay. LI will be okay. Ride will probably be okay. They're all going to run together in like a pack of wolves, all right? But I mentioned this to Carlos today when we were joking about how much we can get for First Solar, because I actually told him I thought I might get $2 per contract. I might claim like 40 or 50,000 today. I thought they might spike it in the morning. I thought it might be manipulated and pushed to $15 a share. And if it was a better market day for that sector, it would have been, and I would have been so happy. I would have returned like 600-700%. The point is, when it did, I got out. But then we talk about some people are carrying the option forward to the next week. So what are we going to do? So I told Carlos, actually, I might get involved with this stock next week. The chart looks great. There's always a pullback. So they had 2 good days. And look at the chart. So just look at the 1-month chart of FSR, and you'll see 2 green inflow days. Today was a selling day. And why was it a selling day? People were taking profit. The stock moved yesterday. It moved really good prior to close. I made 220% in one day on my options. If you can make 220% in your options in one day, there's going to be a pullback. Nothing goes up just continuously. That's what I'm telling these AMC people. It might go higher. You guys might push it higher, but there's profit taking. I would take profit at 29. I'd take profit at 28, 27, 26. I was watching 26 and 25, how it moved in between. Okay, yes, it's going to be fine next week. I'm actually looking probably to re-enter. There's another stock that I'm not going to talk about right now, only to my platform members, but we've been in it a few times. It moved. It was up 5% this morning and closed the day down 4%. So if you know the stock, that's where we're going next week. I'm not saying we're buying it on Tuesday. We might get our best position on Wednesday. We might get the best position on Thursday. It might go down 3% Tuesday and Wednesday. And guess what? We'll get that 6% discount and we'll buy the options in the same way it spiked up 2-3 days this week. You know what stock you are. All right, you're 4 letters and you end in not giving it away. Next question, please. All right, man. You tried to scalp some AMC. When it came down to 29, I think it's supported. It will go up to 35, 36, but now you hold 40. Oh, my God. You're holding 400 shares, bro. This is what I'm talking about. Risk versus reward. So in the best case scenario, you're going to make $2,800. In the worst case scenario, you're now down what? You're in at 20, man. Okay, so you're only down like 1,600. I guess it's not that bad. Now, if you were down 28 and you could only made 16, that's a problem. You need to have more reward than you have risk. Okay, so here's AMC. Now, the good news for you is, so there was huge outflow today. Huge selling today, huge outflow. It actually went down. I know it was really high, so people were taking profit. Now, the good news is maybe you guys call those the weak hands, the paper hands, the scissor hands, right? It falls right through the scissor hands. They have no rocks, okay? So it's $26.12. You're only $3 off, right? So you're only down $1,200. Yeah, you might get lucky on AMC. Like I said, supply and demand, okay? As people are not selling, it goes up. That's why $36. It's crazy. It could have went to 50. But I don't know. I don't know how high is high. I don't know how low is low. I did think if they sold it off, it was probably going to go back to $22. So the good news for you is when they sold off AMC, it only went to 24. It didn't go to 22. That's 10% right there. So yeah, you could be right. And they love to trade it after hours and pre-market, and they love to talk about it on Reddit. So anything like this would be in your advantage. Now, somebody showed me today they made $1,000 on their AMC options. I sold mine at 18 2 days ago, and I made 252%. The person made 1,000, and somebody showed me today they got an AMC. Oh my God, never mind. Okay, next question, please. These are good questions, and they're all learning questions. There's so many stocks that react differently. So I'll tell you right now, if your stock is not reacting with the market, it's your stock. If this is a stock picker's market, you've heard me say that now 4 episodes in a row. Stock picker's market. It means the market could go up, but certain NASDAQ stocks will go up and certain NASDAQ stocks will go down. There are people talking about Apple right now, how they think Apple's going to be back in the $90. Now, if tech does go down, we will be shorting Apple because I've heard multiple people say Apple should be $96. So if tech throws up on itself, I'm going to get on the Apple negative train, and I'm going to assume Apple will throw up even more than everybody else. Something about their iPhone sales and everything else during COVID, and now they have to perform after COVID, and they're just thinking they're not going to outdo it. All right, I should have kept my eBay calls, but I saw for a loss because I was worried about holding them. Okay, so I spoke earlier about positioning. You must have enough money to average down the right way. And if you give yourself an extra week or an extra 2 weeks, you don't get overly nervous. I'm going to give an example right here. I had some options that expired. I gave myself 3 days, and as soon as I bought them, they went down. So I sold them when they were down, and I bought out a week. The stock recovered on that Friday. It went down for Wednesday and Thursday. It recovered on Friday. All right, I would have made 40%. Instead, because I bought out different options, I was still down on the position 40%. So yes, it matters. If you're picking an option that has a very close date, like it's this Friday or next Friday or something like that, you better damn be right about it. If you're picking an option that expires in September, you could pick NEO or Delta or Carnival. And if Delta and Carnival go down 1.5% today, it doesn't matter. Because you know in September, Carnival is going to be $50 and you know Delta is going to be $72. All right. So when you pick options with anyway, okay, next question. Yeah, you made a mistake. If you don't have, I don't like to use this term, like balls of steel. Okay. If you scare sell, then you can't play options. And I'm not making fun of anybody or saying that's what he did. I'm saying I've done it before. I go in, I take too big a position. Instead of buying 5 contracts, I buy 55 contracts. And then I average down. Now I have 255 contracts and I'm down 40%. And I know I think the stock's going to turn around. But if it doesn't, I'm going to lose thousands of dollars. So I've sold it before like you, okay? Weak, paper hands right here. First to admit it. The point is, now you learn from it. Next time, Nick, buy 1 contract. Then you average down, buy 2 more. You would have had 3 contracts this morning. You'd be in for like $140 and you'd be profitable. So if you can't handle the swings, you just have to play with less money. 1 contract, not 5. 2 contracts, not 10. All right, next question. It's okay, dude. It's all learning. Everything's learning. If you think people are here to teach you this, they're wrong. This is everyday life. This is why I love transparency. This is great because I use your examples. All right, NVIDIA hit an all-time high, new price target, 720. Yeah, somebody gave it a 720. I don't think it might not hit 720. Buy rating next week, 4-to-1 stock split. Yes, you have 2 contracts. Still a lot of demand. I'm going to tell you if there's a lot of demand. I like NVIDIA, but it just went from $570 to like $600 and something dollars. I'll tell you right now. NVIDIA, here we go. So understand, it went from $582. It spiked all the way to $645 because remember I alerted it. Day was $582 a couple of weeks ago. I said it's $582, went to $592, went to $612 that day, then $624 the next day, then $645, and then during that market sell-off, it went all the way down to like $500 and like $50. It's $650 now. All right, so it went from $550 to $650. All right, that's 20% in stock move in about 2 weeks. $550 to $650. That's substantial. All right, for a big price stock. So yes, that's a positive thing. The chart looks great. However, I think it's overvalued. But they are the number 1 chip maker when it comes to the video games. They're better than AMD. They're better than Xilinx. So yeah, I mean, and people like 4-for-1. They like cheaper stock. It worked with Tesla. It worked with Apple. So Amy, for you, watch. But you don't do it enough, Amy, because you ask questions. So remember, plan ahead. Whatever you have it at. Let's say it's $31 right now or $32. Try and sell it tomorrow for $80 or Tuesday. Get 130% gain. If it doesn't sell on Tuesday, try and sell it on Wednesday. You have until July 16th. So every day I would put in the same order, looking for 200, 300%. If it sells, great. If not, I put it in the next morning. Every morning, everybody should start off the day the same way, putting in your orders. I'm going to sell this if it hits that. I'm going to sell that if it hits that. That's what we do. We plan in advance. If you missed the beginning of the video, go back and watch it. It's all about lessons. 3 simple steps. Entry point, planning in advance, and having a strategy. Next question, please. MP 618 strike. Okay, MP I think is materials, right? Wasn't that as high as like $34? And now it is $28. Okay. So yeah, you got in great for your option play. You obviously bought the option on a dip, which means you're learning, Amy. I love it. Okay, because the stock is $28. She only paid $4 for it. $25 strikes, so the value is basically $29. It's at $28. So she's only paying $1 for like 3.5 weeks of a stock that could spike like $7. She can get a great return on this. Now, you bought the stock at $35. I'd be more worried though. What would I probably do? I probably would have sold my stock and bought more options. Watch episode 14. I tell you, if you're in a shitty stock position and the stock went all the way down to 25, so you're in at 35, it was 25, you were down 40%, okay? Watch episode 14. When you were down 40%, you should have stole your stock at $25 and done what? Bought your options that day. When your stock is the most beat up, if you think you're going to be right about the stock in the future, you sell your stock, you buy the option, you go out a couple of months, and you make your returns right away. You're down 40%. I did that the other day with someone, CCIV, then it spiked. The dude made back, he was down 60% of his stock. He made back like 30%. Okay, next question. Stock looks okay, but you have to average down. Okay, NET. NET likes to move with D-Dog. They're cloud service companies. NET is Cloudflare. I like it. I saw demand. It does fight. It had a short against it. You have June 11th calls at $82.50. First off, stock's at 82.06. That's fine. What did I see today? What is the chart telling me? The outflow was so little today. All right. There was outflow. The stock went down 1%. It was low, meaning low volume, $2.4 million. Yesterday, when it went up a bunch, and we remember it went from $80 to $83 yesterday because we were in it. We made money yesterday. I made 80% yesterday. So when we were in it yesterday, the demand was 3 times what it is today. So it did 2.4 today. I bet you did 9 million yesterday. When there's volume and there's demand, volume, demand goes together. It goes up. You make money. Demand, it goes up. It's green. So yeah, I like this stock. Chart looks great. Oh, here we go. Real quick. Anybody that uses Webull, okay? If you use Webull right here, change your graph. Do not use candlesticks. It is so freaking confusing. I was giving a lesson today, and the dude was on candlesticks, and I'm on a line graph. Line graph. So when I tell you guys, do you see the W? You'll see the W. It's a line graph. Why would you use these candlesticks? It looks like a freaking Picasso painting. Next question, please. Peloton and Lemonade. Oh, you like risk. So what do I think about Peloton? Again, I don't think it's worth $100, which is probably where it's at after Kathy bought some. It went from 82 to, oh my God, $110. You're thinking about doing what? Some risky options? Yeah. Peloton, the chart looks fantastic. It just spiked on very little demand. There hasn't been demand since they sold it off into earnings. So no, I would stay the heck away from Peloton. Doesn't mean Peloton can't go from 110 to 120 to 130. It means risk versus reward. I would wager 50% of the chance it's going down, 50% it's going up. I don't make wagers like that. Why do I want to flip a coin? If I want to flip a coin, go to the casino, bet on roulette, bet red or black. It's one or the other, okay? If you want to flip a coin, great. Peloton, stay away from, Romeo, man. Let's look at Lemonade. Now, I know Lemonade went from a lot to a little. So LMND. And then when I say a lot to a little, I know it was in the 90s, and then it went all the way to the 80s. Oh, my God, it went all the way to the 60s. Yes, Lemonade looks great. LMND. The chart looks great. There's very little outflow, and there's only been inflow, and it is now going to my list. I didn't know it was at $90. I would have loved to get in this at like $82. It was as low as what, $60 earlier this week, maybe $56. It's please. I mean, that's when you enter in. When a stock is beat up, Romeo or anybody else, we're looking for the stock to dip so hard that it goes from $86 to $56, and we're looking to buy along the way. It's 60, it's 61, it's 62. Those are the options. And when it spikes back to $90, that's how we get the 500, 600, 700% return. But yeah, July might be good. Lemonade might be $123 by then. So yes, depending on what it costs, if it costs you $10 an option and you can make 100 or 200%, go for it. Next question, please. Oh, you know what? It's Friday today. I think we're going to cut it a little shorter on Friday. We're going to do about 5 more questions. I appreciate everybody. Please pay it forward. Share this video with someone. We're going to do about 5 more questions. I've been losing my voice, and it's going crazy, and I can't wait for the weekend to spend some time with your family. But thoughts on Gevo. Ready? Gevo. I said it the other day when it was $6.88. I said, one of you brought it up, and I said, this chart looks good. And before I could get in, it spiked to $7 and change. And I remember my top on Gevo. When I was looking at it, I thought maybe it could go to $8.80 or something like that, and there wasn't enough upside for me. The stock was already $7 and change, and there wasn't enough upside. But yeah, the chart looks great ever since it bottomed at $5. Now, I don't know what the top is. I made an assumption that it was like $8.80 or $9. The stock's at $7.50. So yes, if you want to scalp 20% off it or play options, I think it'll move good. There's been good volume and good demand. But I don't know how it goes. I don't think they're a $14 or $15 or $18 stock. So I think there's a cap there. Every time the cap, it seems to cap at $10. That's the ceiling. So if you get up to $10, you better sell. All right, next question, please. Good questions. Matt, can I explain how to purchase an option? Yes, for everybody. It's very simple. Whatever app you're on, here's what you do. You pick the stock out. Pick out a stock. All right, Tiger, TIGR. You look it in, you click on it. That's it. So the Tiger opens up, you click on options, right? Then the next thing it'll ask you is your date, your expiration date. So we're May 4th. You look down, you're like, okay, let me go to November. Boom, you click November, okay? Then you pick your strike price. I like in or at the money. So Tiger's like $23 right now or something around there. I would pick $22.50. Boom. Then it tells you a bid and an ask. Now the bid means somebody's willing to pay that much for the option. So somebody's willing to pay $400 an option. Now, the ask is the owner of the option says, I want $500. The bid says, I will give you $4. The owner says, I want $5. What do? You find a price that you're comfortable with, and you say, I would pay $420, and you put it in the system, and you turn off your screen, and if it goes under 420, someone's going to sell you it for 420. And then you turn on your screen and you wait. And then you plan. As soon as you buy it for $420, what's the first thing you do? You go and you put an order to sell it at $630. Now, it doesn't have to hit there today, but if it hits $630 tomorrow, the next day, the next day, the next day, you're going to make 50%. So this is a strategy. We buy the option. As soon as we buy it, we put an order to sell it. It doesn't mean we're selling it same day, but we have to buy it and sell it rather than being a watcher and watching something go up and go down. I can remember my elevator speech. You ride it up, you ride it down. You ride it up, you ride it down. Why not ride it up, get off as high as possible, and when the elevator goes back down, you get on again. Get on again. I mean, this could be like a dance or something, you know? Anyway, next question, please. Okay, even though it was a flat week, I was able to double my account. NET, NNOX were great plays. Yes, this week we had the best week ever. Actually, it seemed like every play was like anywhere from 80% to 100 and something percent. I made 200 and change. Some people made 300 on a couple of different things. And it's not like there was only one alert or two alerts. There were multiple trades. So this week when everybody was struggling, I was a stock picker. I showed you guys what I saw, and we crushed it. Okay, UVXY, $4.50 put expiring next week, 57 cents. So I think it'll drop more. Yes, UVXY, all it does is go down. So even though it spiked in today, and these numbers are difficult because it went at 10-for-1 reverse split. So you say $4.50, you actually made a $45 split here. $45 put, okay? And the UVXY was what, like $38? Let me find it. Here we go. $36. So it's $36.16. You have your put at $45, so it's $9 in the money, okay? 50 cents. Yeah, it's going to keep dropping. It's going to be around probably like by that time, maybe like $32.80. So the equivalent of like $3.30. Remember, it was $4 last week. It's going to be the equivalent of $3.30. Yeah, you're going to make a killing, bro. You're going to make at least 100% on that return. 100%. Okay? Yes, UVXY, anytime it spikes, you want to buy puts. It's going down. Next question. Yeah, I mean, that's the best thing about it. Matt, what do I think about FSR? FSR, I love. NNOX, I love them both. Okay? Here's the good news for you, Spruce, okay? There are two stocks that I'm thinking about for next week. And anybody that stayed with me this long, here they are. Let me point them out. There they are. FSR and NNOX. I like both charts. Now, remember, those two charts were so strong for 1, 2, 3 days. So, of course, I mentioned today what's going to happen. There's going to be consolidation. When a chart runs good and there's profit taking, the chart goes up here, it consolidates. It finds a lower high, a lower base. It's like, say you lived on the 4th floor and all of a sudden you moved up and you stayed on the 10th floor for 2 weeks. Okay, you got kicked off the 10th floor. You're back to the 8th floor. You don't have to go all the way down to 4, but now you found a new home at 8. And the next week, you're going to go up to 15, and then you're going to find a new floor on 12. Do you understand? You find higher highs. So yes, FSR and NOX, I'm going to be looking to enter into next week. All transparency, I couldn't lie to you. You called out my two stocks that I'm looking at for next week, and there it is. So I'm looking at those. Point is, I know what strike price. I know what entry I'm looking at. My platform is $3.49. Please come join. I mean, it's ridiculous. Everybody comes, joins. It's a family. We stay. Next question, 1 or 2 more. You guys are great. Have a good weekend, everybody. There's no trading on Monday. There's no video on Monday. We'll see if maybe I can drop a video this weekend, but I'm not sure. SOS. I'm about to punch the institution in the face. Doesn't have a move. How long is this short sale? Okay, so SOS, it's a Bitcoin mining company. Now, I spoke about Bitcoin stocks before. 18.5 million Bitcoin has been mined. 2.5 million Bitcoin left to mine. I like best in class. SOS is a Chinese company. China is cracking down on Bitcoin, crypto, and mining. So, no, I wouldn't want to be on SOS at all. I would not want to be. I'm in a Chinese company, Ebon. I'm in a Chinese company, Ehang. I'm in a Chinese company, Neo. I don't mind Chinese companies. What I do is Chinese crypto company that specifically mines Bitcoin, probably not a great play. If you want to be in something related to that, you might want to be in a Riot or Mara. I believe they're U.S. companies. And at least, we're not cracking down on the mining regulations. All right, next question, please. All right, let's finish it off with this one. Hey, let's all share Matt with everyone. I did share to 3 people yesterday, and one of them paid. Okay, that's great. Yeah. So somebody said to me, never mind. You guys are great. Please, Russ, awesome. I'm going to talk to you later this evening. Everybody have a good weekend and enjoy, man. Happy trading. We crushed it.